Hi everyone, Ben here from
Hey
Investor.
Ben.
I've got Leigh Jasper joining us today. Thanks, Leigh, for coming on board and having a
No
chat.
worries, man. Yeah.
And we're just talking about it. We're just talking about headspace and the lack of headspace with regards to being that kind of listed CEO and having so many things to juggle and deal with.
Yeah.
People who don't know, maybe give a little bit of background on your exposure as being in the listed space.
Yeah. So I started a company called Aconex back in 2000. So we first wave SaaS, built a product for construction engineering projects to manage and collaborate, to manage all the people involved and collaborate around delivering the project, and built that business up. We had multiple fundraising rounds and then listed the business in 2014 and had 4 years before Oracle acquired us and took us private again. But yeah, so 3 to 4 years as a relatively young CEO on the ASX, and all the ups and downs that had. And I'd say it's a good journey, but it's different when you're a private company. You make a mistake, people might know a bit about it, but it's not up in lights. You make a mistake as a public company, and yeah, everybody knows about it.
Everyone knows. It's an interesting point. Like, it's just that extra dynamic that it is very public.
Yeah, yeah, yeah. You go back to what we were talking about before, but the headspace issue. It's just I just found if I didn't structure my time well, I just continually running from one thing to the next, and you're in a position where again, you make a mistake, it's very public, but then you have to deal with things very often very quickly. If we had a short seller moving on it, or a bunch of short sellers, we're the most shortest stock in the ASX at one point, and so you're dealing with all of that, and there can be times when it runs very smoothly and it's great to be a public company, but when it's not, it's quite tough.
Almost like a amplifier on it.
Yeah, it amplifies the ups and the downs. Interesting. We said to everybody when we were listing the company, don't worry about the share price; it'll sort of sell out over time. And then you sort of encourage everybody not to worry about the share price, and then you realise that you're looking at the share price yourself. And you wake up and you go, "Oh, what's the share price doing? What were we this morning? What's it done over the day?" And I try not to look at it, but yeah, it's hard. You've got another measure that's just sitting there and then sort of judging you day to day to some degree.
And a lot of the time disconnected from the reality of the business.
Completely disconnected, yeah. I mean, in theory, it should correlate over time, but from day to day, yeah, completely disconnected from what's happening in the business. And we'd be going well, but the market would think we weren't, or vice versa. We might have had a few issues, and the market thinks we're going great. So it was just an interesting seeing that the view into the business very rarely lined up with the view from the business. And then once you report, of course, you'd expect that it would line up, but even then it didn't always line up. We'd go out with great results and think the market would like it, and it didn't. And it's just the way it is.
I remember one CEO, she had the best results she ever had, and she announced them to the market, and she's like, nothing happened.
Yeah.
And she termed it was like shouting into the void.
Yeah.
Because there's just like no feedback loop sometimes, and she was super stressed because she had felt like she had no agency over the process, for the outcome.
Yeah. And the other thing we had was, again, in the listed space, a little different, but at least as a private company, we knew who our investors were, and you've got them on a cap table, you've spoken to them, you've always had a conversation with them before they invest. As a public company, we had people that we didn't know who they were that invested, and then they would buy and sell whatever. But you're just dealing with an investor base, and obviously you guys help with this.
I was trying not to.
It's not a pitch for an investor hub, but just knowing who your investors are is just a whole another thing, and you don't know why people are in or out of the stock sometimes.
No. And again, it's that control thing, which just time and again sort of amplifies that stress. Someone was talking to me about this concept of net stress, where you can have a much lower stressful situation than someone else. So say you're a employee in a business versus the CEO, and something in your department's not going right, and you have no control over it, but the CEO does. The CEO might have a 7 out of 10 stress, but a 6 out of 10 control. So it's kind of like a net impact of 1.
Yeah.
Whereas you, as just the employee, might have a 5 out of 10 stress, so less stressful overall, but 0 control.
Yeah.
And just how you just feel it so much more.
Yeah.
Yeah. And, you know, the Aconex story is obviously one of the Australian success stories from a tech point of view. One of the few to really go private to public and then exit as well. I couldn't even count how many there would be, but like I said,
not too many, not in tech, but it's I mean, look,
yeah, that's what I mean.
Has developed well. You know, when we listed, we were one of the few listed techs, but it's improved. And of course, many will list overseas as well. The bigger one, you know, obviously we've seen Lassie and others go to the US market, but which is fine, of course. But yeah, it's certainly changed a lot from when we listed 10 years ago.
Yes, but you're still involved in the listed market, so you sit on the board of Seek.
Yep.
And I guess from that point of view, having the difference between being in the C-suite versus in an NED role in the public space, have you noticed any differences between those two jobs, or is it still very much leading in that public environment?
I think it's a little different at a board level. I think the thing you never look, to be honest, probably this is to some degree as you mature and you've been through the journey. Maybe it would be different if I was in the listed space as a CEO second time round, but first time round, for me at least, I felt that heat has been the focal point where people can be unhappy with how the company's going, and might, you know, or again, that could be positive or negative. They could be happy, could be unhappy, but it tends to focus through the CEO. I think that's the reality. And in some cases, a chair will take some of that heat. If there's, and we've seen some recent issues around certain companies where the chair will take the heat, but and then sometimes it can extend to board. But I think the board is you're a group, and so you're not quite the focal point as a CEO. I mean, the board in some ways works through the CEO to the rest of the business. So the CEO, another way to put it perhaps is the CEO is quite a lonely seat to be in, and you need support around you. I think a lot of CEOs don't have that, and certainly on my journey as a CEO, you know, you can't always talk to the board about everything. That's just the nature of boards, and you certainly can't talk to management sometimes if you've got issues. So you need mentors or support systems outside of the business, I think, to help. And I had, you know, a couple of mentors that I'd sort of be able to talk to who had been CEOs, and I also worked with an exec coach is one thing I did, just to have somebody who kind of had my back, because the board doesn't always have your back. You'd hope they do a lot of the time, and management may, but you can't always talk to management about issues. So it's it's a tricky position, and it's quite a lonely position being CEO. And it's the same with the founder journey, but I think it just gets amplified through into the public markets. So you've got to be quite resilient to take on that sort of role.
Did you have the exec coach when you were CEO, or you have one now?
Yeah. I had one. It's interesting, and look, our board was very good at Aconex, and the board was very happy for me to have that actually quite a few years before we listed, and just that, you know, I was a leverage point in the business. So the board, actually one of the board members who encouraged me to, you know, they said, look, I must, you know, it's an expense for the business, but you're a key leverage point. We need to make sure you're growing and performing for the business. So but I found that really good, just to have somebody that I'd worked with. In the case of we're listed, we'd already been working together for 2 or 3 years. So I think worked with other listed company CEOs, and very good helping me navigate that, navigate the relationship with the board, the management team, etc.
If you were, you know, if we're talking to, which we are in this series, right, talking to other directors and C-suite of listed companies, what sort of things would you look for in that executive coach if you were, you know, talking to another listed CEO? Is it do they need the listed experience? Is it useful to have other clients in the listed space?
I think I wouldn't say the coach needs to have that listed experience, but I think at least at a level, you know, ideally they've got experience in the business larger than what you're at currently. You need someone who's seen other executives navigate growth, scaling of a business. In the case of the person I work with, they were in the US, and so they'd seen other businesses go, Silicon Valley based. They'd seen other businesses go through. And I lived in the US for 4 years, is when I started working with that person. They were great, but they'd seen other tech businesses go through that run up to an IPO and then list. So that is useful for me. But when I say it's necessary, I don't know about that. I think the most important thing actually for an exec coach is that it's all about rapport. You need to. They're going to be working closely with you, so you need to get along with them clearly. And I think they need to understand, have an empathy for where you're at and understand your position and who you are. It's more of a, it's as much a personal relationship as a business relationship.
Yeah, that's a good point. You spoke a little bit about the difference between, when you're a private company, you knew all your shareholders, and as a public company, obviously you don't. But I think the other aspect is, as a private company, your shareholders are static day to day versus quite fluid as a public one, right? So it adds that extra layer of management, relationship management, etc. How did you go and how do you still go in a listed capacity, managing that on a more fluid basis versus in your private endeavors?
Yeah, I think one of the things I learned through the Aconex journey was, in speaking to shareholders, you're going to have, particularly as a public company, you're going to have a range of views on what you should do as a business. So first couple of earnings, seasons, I'd have the extremes. One investor would say you should be investing everything in growth, go harder. You've got this massive opportunity, and then the very next conversation could be with a shareholder who thinks you should be maximising profitability and really focusing in on the markets that we're in. Don't look at new products. Just make sure you again driving profitability. So what I learned through that was you just need to be clear on what you're doing, what you're trying to do with the business, and kind of to some degree let shareholders align with your business. And you get the shareholder, to some degree, you get the shareholders you deserve. And what I mean by that is, if you don't communicate clearly, you can end up with shareholders across the map. Whereas being very clear around the path, the strategy for the business, and what you're trying to deliver, at least then you'll get the shareholders that are aligned around that strategy. And I think we did a better job of sort of communicating where we were headed. It wasn't growth at all costs, but it certainly wasn't maximising profitability. So we're being really clear around what our growth plans look like. And I think by year 2 or 3 as a listed company, we had a better handle on how we engage with shareholders, and also, frankly, a more aligned shareholder base because we clearly communicated what we're trying to do.
Obviously, I resonate extremely strongly with that. And I think I just wrote down, if you don't communicate clearly, like on your point, if you get the shareholders you deserve, if you don't communicate clearly, you get shareholders who don't understand.
Yep.
And I imagine that through that, essentially that self-selection process, it then aligns people and therefore lowers the stress level, because you're not trying to convince people constantly who came on incorrectly.
Yep.
But you've got people who are actually aligned to your journey.
Yeah. Yeah. I think the other thing is to understand the context of where shareholders are coming from. Like, it's not personal. So there's another thing that I had to get better at, and this is the part of the personal journey, is more personal development and how you become, I guess, a better leader. But it's also, it wasn't personal. It's easy to take it personally, and sometimes it can be frustrating, but they've got their job to do. So they're trying to maximise their returns, etc. So I think I was better at realising that, we might not have, a shareholder might have an issue with something we're doing. Okay, but that's fine. But that's not necessarily, it could be in some cases, but I think in most cases, not an issue with the person who's leading. It's rather, again, what your strategy is, how you've communicated, is the other things around it. So just another way to put it is trying to distance yourself, and it's actually very hard as a founder of a startup, and you understand this, but to separate yourself from the business, to say, the identity of me as a person is not tied up in my business. And I think if we find our identity in something, we have, we have some control over it, but your business is not you. And that's why I got about seeing it as a job. Actually, one of our shareholders and a bit of a mentor for me, said, one time made it very clear. He said, it's a job. Just treat it, it's a job. Like your job as CEO of Aconex or founder of Aconex, it's a job. Like you don't see it as being all about you. It's a job you're doing, and while you can do that job, great. But who knows? You may not want to do that job in 5 years, or maybe the board doesn't want you to do that job in 5 years, but it's still just a job.
Well, I think that success, the definition of success in it is that it continues past you.
Yes, absolutely.
Right. So therefore, it can't be about you.
Yeah, that's right. And I think where it can be a real problem for founders is when they do put their identity in the business they're building, and then great if the business goes well, but we all know the chance of that in startup land is pretty low, and even more so to get through that scaling period into being a listed company. So it's really important to separate yourself from your business.
Yeah, there's also a really interesting dynamic. Obviously, what do you remember the market cap or roughly of Aconex when it hit the boards, when it listed?
We're about 300-400 million.
Okay.
Exited at
1.6.
1.6. So, but we had a bit of a wild ride too. Didn't move much to start with, then took off as we started hitting our. We delivered on our plan, and then the market started to take notice, and then the market got ahead of itself, and we met our plan, but the market had bigger ideas for what we should have delivered. We were shorted, went down, came back up. I mean, it was a bit of a roller coaster, but also for me personally, it was a great learning experience to run a listed company and to do something that I hadn't done before, clearly, but also to see, I always, with companies we invest in now as investors, just give people the pros and cons of being listed. It can be a really good thing for your business. And for us, we did an acquisition in Europe, and if the market's behind you, you raise capital, and we raised 120 million in a day. It was compared to trying to raise that money as a private company was a lot harder, clearly. So, but could we have done that when the market was not with us? Probably not. But when the market's with you, there's a lot of advantages in being listed.
I think, I usually talk about being listed is like a annual or biannual benefit, and if managed incorrectly, like a daily drag sometimes.
Yeah, it's a great thing about it. Yeah, that's right.
But the annual or the biannual sort of value is so disproportionate and so good. I think you were talking before about the share price moving, and a lot of the people in our community they might not be founders, but they've still got the majority or a very large amount of their net worth tied up in the businesses that they're in.
Yeah.
You know what it's like being on the board. You can't sell, or it's seen as a super negative sign if you do sell. So you feel very locked up in these things.
Yeah.
And with the share price moving around, it obviously has very real impacts on your personal net worth.
Yeah.
Over that journey, did you find that did impact you? Did you, or was it kind of playing with upside at that point, or was it a sense of, geez, share price went down 5-10% this week, and the gut punch of it all?
Look, first thing I say, this was not set up as a plug for second quarter, but a secondary for any tech founder, and that's partly why we set up second quarter. We took some secondaries along the Aconex journey. When we listed, we took some money off the table. So I'd say to any founder or anybody you don't want all your chips 100% tied up in the company that you're building. And I think the fact that we're able to take a little bit of money off the table, put a deposit on a house, those sort of things to de-risk. But by no means selling out, or even selling the lion's share of what we had in Aconex, but just taking a little bit of risk off the table. So if something went wrong, just lost our light. If something went wrong, it didn't mean I was on the street and destitute. So it's just trying to de-risk a little bit. In fact, the other thing in de-risking, we had one of our investors when we took a secondary as part of one of our pre-IPO capital, so a capital raising, the capital raising meeting, or prior to the IPO, a few years before the IPO, we took a little bit off the tail. And he said, actually, he encouraged us to, because his view was that we would swing for the fences more if we de-risked a little bit. So, so I think that's a good thing to do, to take a bit of an exit. I would say Australia is not as good as it should be on founders selling. I think the US is better, where you can set a plan and you sell. And in theory, you can do it on the Australian market, but nobody does it that I know of. So you end up with these weird situations where anytime we sold anything, the market would sort of have conniptions. And well, hang on, I've got only 1% of my shareholding. It's not moving the dial, but the market took that as a negative signal. So it actually meant that it was quite hard as a CEO of as a big shareholder in the company, quite hard to sell anything. So I would say to anybody who's thinking about going to the public markets, just make sure you de-risk before you hit the market. So don't see an IPO as an exit event. You want to exit somewhat, a little bit of your shareholding before you hit the boards, and then, and again, I'd love to see the Australian market be a little bit more open to regular progressive sell down for founders, which in an orderly way.
They're same with directors, right? Like it's the same.
Same with directors. If you're a director, that's right. If you happen to be a large shareholder as a director, although the advice, I find it bizarre that people want independence is treated as not having any shareholding in the company. And we had this weird situation where our chair had quite a large shareholding in Aconex, as did a number of our directors, and they were treated as not independent. And that to me is insane, where you to have directors who don't have skin in the game, to me just sounds weird. So when I joined the board of Seek, I bought shares in the company because I want the company to do well, and if the company does well, that should be hopefully good for me personally as well. So.
Yeah, and then you're making decisions more tied to your investment rather than your income, right?
And I can see why the market, the investors don't want directors highly leveraged to the company, but there's a sweet spot between highly leveraged and no exposure to the company. And I think those sort of rules need to encourage directors to have some exposure to the company, ideally, even a little bit of leverage to the upside of the company.
Yeah, no, I agree. It's an interesting dynamic of director involvement, and I think we also have to remember. I don't know if you and I have had this discussion about the average size of a listed company, right? But like Seek and Aconex are both well above averages.
Yeah.
They're above averages and they're well above the median. So the median market cap on the ASX is $50 million.
Wow.
So the 2,000-ish listed companies share, like company number 1,000 is 50 mil, pretty much on the nose.
Yeah.
Very much like a startup, right?
Yeah.
If you look at your startup portfolio, it's probably, a median of around 50 million as well, or thereabouts, right?
Yeah.
So a lot of companies, there's a lot of small cap mining, a lot of small cap tech, a lot of small cap biotech that make up the majority of listed companies.
Yes. Yeah.
And they have those same problems that you would see in startups, right? And in founders.
Yeah.
Long lead times at some point, different growth rates, but you have to do it in a public sphere now. So there's sort of the handbrake, that sort of daily drag that we sort of spoke about of a listed company, but still with instead of a periodic change in share price, like our share price last changed in September last year.
Yeah, that's right. Yeah. It's a step change in share price, which, but that's a hard, as a listed, you just see that share price, moving the whole time. It's but yeah.
And I think that also the story, right? Like as a private company, you can kind of put your own dressing on the reality a lot more than you can as a public company.
Yeah. Then the other thing, we found, again, as a listed company, that we're Well, I mean, lots of great things about it. One of the things we didn't like, actually, obviously have to update the market. If anything happens, it's going to move the dial on the price. But we had short sellers come in that they could put out whatever information they want, and there was no requirement on them to disclose that to the market. I think they'd probably eventually disclose their shareholdings, but they could put reports into the market. We had one short seller that basically commissioned a report. Most of it wasn't factually correct, but we were then forced to respond to that, but they were never forced to comment on what they put into the market. So it was, for a beer sometime, but long story that one. But it was just the regulation really hurt us as a public company in terms of us keeping shareholders up to date, whereas shareholders want to take advantage of a situation, didn't have to keep the market abreast of what they were doing.
Yeah. So how, I guess if you just go back to that, and we'll wrap up in a couple of minutes, but if you go back to that, dealing that, obviously stressful.
Yeah.
Rather than harking back to that exact scenario, say you're talking to a CEO today who's going through the same thing, what would be your suggestions on kind of how to manage it, especially from a personal mental capacity?
I think that, look, again, so separating yourself from the company in the sense that, just because somebody's going after your company from a shorting point, it's the job to some degree. And so I think being a little bit philosophical about that. I think, what I've seen this in a couple of other environments where companies we've been involved in have had short sellers go after them. And by the way, I've got no problem with short selling. Like, if people want to short a stock, they should be entirely, they should not be. Nobody should be restricted from shorting a stock. I think what my concern would be there is simply the regulation around it. Like, you can't regulate on one side and not the other side. So a short seller should have a duty of care to the market to explain why they're, if they're putting out a report, to have some factual basis to it. But I think, it was stressful, and I think probably the biggest stress for me is not so much what it was doing personally, but it's to me, feeling something from that from an attack on the company, and whatever it is. It could be criticism, it could be, so if you to move away from just that specific incident, it could be criticism of the strategy, it could be criticism of the performance of the company. Sometimes things that hit the press that, sometimes they're good articles, sometimes they're bad articles, but you can take that personally, and you can sort of say, well, I'm going to separate myself from the company. But the thing I found probably equally hard was the pressure put into the business. So you then had the rest of the company looking at you, and so it just amps up the pressure. And so again, what we tried to do at Aconex on the executive team was just clearly communicate why things were happening. And when somebody sees a share price, so one of the staff members sees a share price decrease, they might not know why the price has gone down, or they see that there's been an article critical of the company in the Fin Review or somewhere, but being able to explain why that's happening, why it doesn't actually matter to the company day to day, assuming it's without merit. But we would learn something you genuinely need to learn from, and they might be they might be criticisms that we need to take on board, but also we would communicate to the team, this is what we're doing as a company. Just as I mentioned before about communicating clearly our path to investors, we would do the same internally to say, this is our strategy, this is what we're trying to achieve. The market will do what it does, but we think that the market will see this strategy and see what we're doing and will align around us. And so we would put context around it for the team. And but when we listed, we always had a very open culture at Aconex. So we had a town hall, and anybody could put a question into a bin and into a letter box, and we read out those questions. But we didn't need to do that. I mean, literally, we had people just on the floor in town halls asking very good questions. So we literally, the day we list, we had a drink in town hall, whatever. Maybe it was the day after, and literally from one of the team, I got, we've listed, you've never been a public company CEO. Why should you be running the company now? And so, and in some ways, a good question. So I answered that question as to why I thought, I'd grow with the company and be the right leader for the company at that point. But the point I'm going to make, that just having that openness of question and that openness of what we're trying to do, I think brought people along. And so we were quite open with what we're trying to do. And I was also quite open with, like, look, yeah, I haven't done this before. I don't know I'm going to get stuff wrong. But I think I can navigate it by and large well. And I think, you know, and the point I made to the person who asked it, you know, I know the person very well, was a good friend within the business, but it's also like, you know, 2 years ago, 5 years ago, 10 years ago, at each point on the journey of Aconex, I was running a company bigger than I'd ever run before. Like, it wasn't like, so at each point it was getting bigger and harder, and I had to grow with that. So, but again, this sort of openness of being able to talk to our team about what we're doing. And one thing it did make it, one other thing that made it a little bit tricky as a public company was had always been very open, and we remained open about our strategy and what we're trying to do, but we of course couldn't communicate results internally like we used to. So the minute we were listed, we had to be careful about what we communicated internally, and that was something to navigate as well, because people are like, well, now you're not telling us how we're going. So we had to, you know, explain to people why the minute we know our results, if we're not reporting to the market for another 3 weeks, we can't disclose it internally. So it was yeah. So that was something that, again, just to a maturing of the business and a maturing of the people in the business to understand why we're doing that.
Good. It goes back to that, you know, communicating clearly, right? Gets you the team and the customers and the investors that you deserve, really.
Yeah.
It's good.
Yeah.
All right, Leigh. Thanks very much for joining us. I think there's a lot for people to take away from this. So it's been great.
Thanks, Ben. Good to catch up.
Cheers. Thank you very much.
See ya.